Good morning, everyone. The G7's unusual statement on FX rates dominated market activity yesterday. The group declared that markets should determine FX rates, but then when the market's reaction to the statement wasn't what they wanted, they issued another message clarifying their first message until they got the rates that they wanted. Most of the day's volatility was caused by these statements, which said that volatility wasn't good. Does anyone else see something odd about this? Anyway, at the end of the day, the G7 statement pushed the dollar down against virtually all currencies, starting with a sharp 1.4% drop against the yen to a more modest 0.2 fall against sterling. My final conclusion on the G7 statements, my reading, is that the group wants to stop Japanese politicians from talking down their currency or from intervening directly in the market as was under consideration, but it is willing to let them run a loose fiscal and monetary policy that will inevitably indirectly weaken the currency. They don't want countries explicitly targeting a weaker currency, but they can hardly object to a country running the monetary policy that it thinks is appropriate for domestic purposes. And if that has spillover effects into the FX market, well, that's why the Bretton Woods system of fixed exchange rates broke down and the floating exchange rate system was instituted in the first place. I'm still bullish on dollar yen and especially on euro yen. I just think the pace of the gains may be slower as the government won't be making the same overt calls for a weaker yen that they were before. The other point to note is that gold rallied as the dollar weakened. That's the usual relationship between the two. But it was noticeable how gold lagged the rise in many currencies against the dollar. At the same time, platinum's premium over gold rose further after Zimbabwe repossessed land from the country's biggest platinum miner to offer it to new investors. Technically, gold looks to us as if it's likely to rally further in the short term, with an initial target of 1,657 and then 1,661. But we still recommend that investors interested in precious metals should be looking at platinum, silver, which also performed very well yesterday and outperformed gold, or palladium, not gold to begin with. This is Marshall Gittler, head of Global FX Strategy at IronFX, wishing you solid trading.